Let's see what our resident retail watcher, Mr. Sazi, is watching for his take today.
Yeah, some big reports on tap, like you just mentioned, Julie. Home Depot might be one of the more interesting results, given the slowdown we have seen in housing. Nonetheless, a couple of things that I'm watching here. First up, and some of these charts come from Kimberly Greenberger over at Morgan Stanley, longtime retail analyst there. Inventory growth versus sales growth. The general vibe on the street is that inventory growth year over year, in fact, peaked in the second quarter. So I think a lot of folks are hoping, a lot of analysts and a lot of investors are hoping that growth rate slowed. That slowed in the third quarter. So a lot of people will be focused on that one.
A lot of promotions set to come forward as well. How is that going to benefit some of the companies and the inventory struggles that they had seen?
Yeah, well, as they were working down those inventories, margins will likely be under pressure for most in retail. And it's not just because of, still high elevated costs, or energy costs, trucking costs, whatever it is, you name it. Just the fact they had to move this inventory and probably lose a lot of money or close to losing a lot of money in the process of doing so. So margins, not just for specialty apparel, but for department stores, and I suspect you'll see it with Target and Walmart, you'll probably see them under pressure as well.
So expansions there is definitely a misnomer because all of those are contractions.
Yes, they're going to be under pressure.
In gross margins because of all the sales going on. That's really interesting here. Any kind of recovery in sight on this stuff?
No, and a large part of the problem is discounting. And the last chart here I'm going to toss up on the board is just the industry discounting here. This is the chart from Morgan Stanley, is likely continue to be under, continue apace this holiday season. I think we heard that from Deborah Weinswig earlier on here. The inventory remains high, discounting is picking up. She was also noting that spending for those making over $100,000 a year also starting to pull back a little bit as well. And all that means profit margin pressure. And to that point, my take is that you are likely to see very cautious fourth quarter guidance. Just last week, there we go. We have all the, Julie, you didn't see Brad Smith cartoon would debut last week. It is good to see all three in that picture nonetheless. But you didn't. Last week, Target, I think, caught a downgrade. Cautious comments from Citi, looking for actually to warn on the fourth quarter. If Target warns, Walmart will probably warn too.
Are we all wearing the discounted apparel that we have purchased?
That's a luxury Santa size hat. That's a luxury Santa size hat. That's a $100 hat right there. That's
but you got it. You got it. For a deep discount.
It was at $250.